Hey folks, Dan Frio here. The rate update today is December 22nd, 2021. We're going to talk about what's going on with rates today. Some news that came out on the home building front and the home sales and much, much more. So don't go away. That's what we're going to talk about next. Okay, so what's going on with home sales? Well, supply is way down. And then if you watch this clip by Diane at CNBC, she says, the word she says is mortgage rates are considerably higher. And then later on she talks and they're up 0.4. I'm gonna go over how those numbers affect your mortgage rate. But let's listen to Diane real quick.
Good morning, Joe. I'm so glad you're excited about this, but it was kind of a mixed bag on the mortgage apps, even though the average rate on the 30-year fixed for mortgages with conforming loan balances fell to 3.27% from 3.30 for loans with 20% down. That was actually the lowest rate in 4 weeks, but still 41 basis points higher than the same week 1 year ago. So applications to refinance, which are, of course, highly sensitive to weekly rate changes, increased 2% from the previous week, but were 42% lower year over year. There's just a shrinking population of borrowers who can benefit from a refinance right now. Applications for a mortgage to buy a home fell 3% for the week and were 9% lower than the same week 1 year ago. Buyer demand is still high, but the number of homes actively listed for sale at the end of November, it fell to another record low. That's according to Redfin. So, big surprise. The average purchase loan amount increased for the second straight week to $416,200, the second highest amount ever. This is both because prices are so high and because the bulk of sales are happening on the higher end of the market. Now, mortgage rates began this week higher and climbed even more yesterday, and that is the general trend expected in the new year. Joe?
Think about it, Diana. So we went in the pandemic and we decided we got to figure out what's that mean? People moving out of the cities, people moving to suburbs. All right, we're reopening. All right, so what's that mean? People now, it looks like New York's coming back. Okay, now wait a second, the pandemic's back. No, can we make any determinations? It's really about demos and millennials.
There's a big difference.
What is it?
A big difference
what
now,
are all
right
the
now.
cross currents?
The
What's
big
it all
difference
add up
is.
to? Yeah.
The big difference is that last year we had more than a dozen record lows on the 30-year fix. So that helped all those people move out to the suburbs and buy the bigger homes that they wanted to. As I said, we're now considerably higher in mortgage rates and home prices, 15 to 20% higher than they were a year ago. That's for new construction and existing homes. I don't know that you're going to see quite the amount of sales that you saw last year as you see in the next year because of those factors.
Then long term, do you see that the population's not growing? I don't know why. That's slowing down, but there are demographic trends favoring
rental. I'm seeing big growth in the single-family rental market. That's where investors are putting their money right now, single-family rentals.
Okay.
I'll say there's a lot to unpack there. But the one thing I want to say is I just posted on a poll on YouTube. Why isn't there any houses for sale? You know, I kept saying the forbearance thing. I still think we're going to see about 500,000 new homes come on the market in this January, February, March because of forbearance. And then that's also the time that most families start looking for a home because the kids are getting out of school within a month or two of that, and then they can move and transition and so forth. So only time's going to tell on that part. But I wanted to really dissect when she said, you know, they're considerably higher. But let's unpack a little bit of the other information that she said. Considerably higher was the thing as I noted. They were 3.27. Today, they're 47 basis points lower is what she said. So that's where I got that information. And the supply chain right now on housing is at a record low. And then this one kind of threw me for a loop. The average priced homes being sold right now is $416,000. So let's go into the news and really dissect some of this stuff. So this is just what we went over and saw. Diane Olick just came back and said mortgage rates hit 4-week low, weekly refinance applications down 2%. We're actually seeing an uptick here. Don't know why. I think it's the educational channel we have, plus you guys out there helping us support the channel, so thanks for that. Let's dive into this a little bit. Just this intrigued me. I'm going to put in, and she said the average house right now selling is $416,000. I don't see that on our end, so I'm gonna bring that down to about $300,000. So $300,000, that's still a really expensive house throughout the country, other than big city pockets. So let's go with $300,000. She said the average down payment was 20%. That's what all her numbers represented. So I'm gonna put the 20% down, and the 3.27 is what the rate is right now that she stated. All the other information down through here, I'm going to put California, Orange County. That'll pull in the real estate taxes and other stuff. It'll factor it off of that. You're going to see that the house payment for that would be $1,447 total, all in. Taxes, insurance, the whole ball of wax. Well, let's say that's $1,447. Well, rates are considerably higher. They used to be 2.86. 2.86. What's that payment? $1,393. So the difference between the two is $54. Would a $54 increase really stop you from buying a house? I don't think so. I wouldn't. You can't go out and get a hamburger for you and your wife or significant other and a Coke and some fries for $50. We might be able to help you save on your homeowners insurance $50 a month. So I don't think that is. I still think the biggest issue here is, again, look at all this in context. What considers or what calculates a price of a good? Any good. Supply demand. Okay, if you took Economics 101, you'd learn it's supply demand chart. That's how prices kind of get factored in. How much somebody's willing to pay for something, and then how much is somebody willing to take for something. And when those match, you have a transaction. So unless we get more supply in the market, you're going to see this going up. And actually yesterday I said, the Biden administration doubled the tariff on Canadian lumber. It's not political, but I'm just saying, is now the time to do that? And I'm looking more into that, but I don't think so. Homeowners, home builders, home buyers, we would thrive if somebody would dump some lumber on our economy right now. So just a thought there. So let's get on to more of the other news that we want to talk about today. So that's, again, $54 is the difference in a $300,000 purchase. If the rate went up, as Diane Olick said, considerably, it went up by 0.4 or 40 basis points. All right, so where are rates today? Well, great question. This is why people follow me, this and a lot of other context that we have. So let's go through this. This is a report posted by the Mortgage News Daily, and it comes out every morning and every evening to tell me where the market opened and where we closed. So let's dissect this real quick. So if we go to the top here, you see the 30-year FRM. That means fixed rate mortgage. Today it's 3.22. Yesterday was 3.17. The difference is 5 basis points, and that's representative of 0.05. That's how you read this. The 15 years, 2.55. It's up 2 basis points from the day before. FHA and /VA is a 2.8. Up 5 basis points. Jumbo is 3.14, up 6 basis points. And the old 5-1 ARM is now up 18 basis points, almost matching the 30-year fixed. So why would you take an ARM? Great question. So what's the economic calendar for today? Well, domestic purchasing price index is basically in line. It's 0.1 off of where was expected. Last month came in at 5.9. Consensus was 5.9. We came in at 6. So that's domestic purchase pricing indexes, okay? Domestic pricing index. Let's go down to where we're considering or we're focusing on. Existing home sales, where are they? Well, last month we saw 6.3 million. The consensus was for 6.5, and we're at 6.46. So right between there. I'll take that all day long, especially with the world's, the way everything is going right now with COVID 500 and everything else. As CNBC said, 1 week it's no COVID, the next week it's back to work, the next week it's, oh my goodness, it's so whatever's going on there. But we do have consumer confidence that came out, and it's actually much higher than we expected, much higher than I expected. So that's great news there. So what is all this doing To the markets, the MBS market, well, here's we see right here. What is this number? And I'll briefly go through here. What creates or is the biggest determining factor of a mortgage rate is what the yield is on the mortgage-backed security bond. Okay, this is what's going on with that. This shows that the price, we see the price and the yield. Okay, when the price goes down, what happens with rates and any bonds is when the price goes down, rates go up. Okay, conversely, the same way the other way. If prices go down, if prices go up, rates go down. So sorry about that. I'm going to keep this in here. I'll keep this will be a blooper reel. All right, so let me get my head out of the way. And that's what's going on right now. The trend is basically, here's where we've been for the last week or so. Here's where we've been for the last 2 weeks. We are down, but not huge, but we're down, okay? So that's what we're seeing right now. What you have to keep in context is this week there's probably a lot of people on vacation. Okay, so Wall Street and the bond markets and everything else, every trade is going to be exponentially multiplied because there's not a lot of people to counter. What I mean is, let's say you're looking to buy a house and you go in and there's 100 other bidders. Well, it's going to bid that price up. Okay, there's no other bidders. Well, you can bid whatever you want because there's nobody there to counter you. So you can see how the less the people are activated or in the system or on Wall Street trading and so forth, you're going to see every trade kind of multiplied. Trust me on that one. Been doing this a long time. What's the intraday chart right now? Well, let's get to that. I'll get my head out of the way. It's kind of not a bad pattern other than this little hiccup right here. I don't know if that's just a technical, somebody tried to trade real low and then it got picked back up. You could see it right there. That might be one trader and nobody was picking up that trade and then people came back in. So basically we're almost stagnant for the day. I like it. Tomorrow I think is going to be a really, really, really slow day, and then Friday is being non-existent. So that's what we're seeing right there. So we have a lot of people calling in, and the debt servicing program that we're offering is if you have an investment property, we can actually get you qualified to buy or refinance an investment property on the rental cash flow only. That's a big program we have. Another program we have is if you're in forbearance, we'd love to talk to you. Could give you exit strategies on how to get out of the forbearance. What a lot of people are doing right now, believe it or not, is they're pulling cash out to pay off bills or have a little security blanket while rates are still low. Let's look at it this way. You can borrow money for 30 years at, say, a rate of 3.25. Take that money and maybe invest it. Take that money and pay off high interest rate credit cards. You're paying 20% on your credit card. If you don't know that, check your credit card statement. I can almost assure you it's probably 18% or higher. So these are some of the things that we do for our clients. So that's it for right now. If you'd like to reach out to me and my team to figure out how we can help you, if you're looking to buy, build, refinance, cash out, do anything like that, please visit us at, and turn my head, at therateupdate.com. Okay, you're going to see here up at the top right, you're going to see you can give us a call. That's the best way that I encourage people to reach out to us, is to give us a call at 844-775-5626. That's the first way to do it. The next thing is your situation is unique in one way or another. It's a job situation, it's income, it's your savings account for your down payment. It's something. Well, a lot of people like to talk to us. We like to talk to you and go through this. You can also do it by Zoom or phone call. But the best way to do that part of it, especially if you're on the West Coast, is book a meeting with us. You just click right here. It's going to open up our calendar. You pick a day and time available. Okay, at that time, we will be reaching out to you either by phone or by Zoom, however you choose, to make sure we answer any and all the questions that you have. So that's it for this morning, guys. Thank you so much for watching. We're about 90 people short of 19,000 subscribers. So if you would, please don't forget to give me a thumbs up. Subscribe down below. Hit the bell every time I post a video. You get an alert. I'll be back later this afternoon, guys, to talk about something. What that is yet, I don't know, because I posted a poll on YouTube. Whatever the results are, that's what I'm going to answer for later today. So God bless. I'll see you later. Bye-bye.